Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, November 26, 2019. I'm going to do a video here. First video today was covering the broad markets. I'm breaking these down. What we'll do is we'll keep this one focused on precious metals as well as the US dollar, because those two, I always say, any analysis on gold and the precious metals is not complete without analysis on the US dollar, because that has a big impact on the price of gold. And if you're not familiar with why is, gold in most places around the world is still priced in US dollars, and certainly the gold we're trading here in the US or other countries that are close by, like GLD, the ETF. So therefore, if the dollar were to drop in value, say 10%, it's going to take more dollars to buy an ounce of gold. If you freeze supply and demand on gold, a falling dollar is bullish for gold because it takes more dollars to buy, so therefore the price of gold goes up. Likewise, if the dollar rallies, it takes fewer dollars to buy an ounce of gold. Again, that's freezing supply and demand. And I've showed in the past many times, and you can do it yourself. I want to keep this video as brief as possible. Just overlay a long-term chart of the US dollar and gold, and you'll see the unmistakable correlation. There are temporary disconnects from time to time, but if you go back 10, 20 years or more, you'll see that's a large, very, very high inverse correlation, meaning one goes up, the other goes down. All right, so let's start out there on the daily chart of gold, and I'm just going to tell you on gold, a lot of these precious metals I don't have very strong convictions, especially on the near-term directions, but I will show you levels to watch, share my thoughts on where I think things might be going, especially intermediate to longer term, and again, things to look for that might change that outlook. I've been bullish on gold now for the last couple of years, and it has been and it is in a bull market right now, so I'm still at this point in time viewing this most likely as just a corrective phase. I'm talking about the downtrend that gold's been in for the past few months, corrective phase within a larger ongoing bull market. There's no way to say that definitively. But again, I'll share with you what I see and let you decide, and more importantly, share things that I look for that might change that view. Now, what's gone on lately? Before I get into the charts. Gold, especially earlier this year, had a couple big runs. It was a big flight to safety asset. There was a lot of talk and fears about recession, which those fears have been abating lately. That's why the market's broken out to new highs, or continue to make new highs, I should say. And the one thing I can tell you, I've done this for a long time, sentiment can change on a dime. Don't underestimate just how quickly things can go from everybody being very bullish or very bearish to the other way around. So stay on your toes and just be flexible. All right. So looking at this daily chart, you can see a few levels I have marked. I'm going to say these aren't super solid levels, but this one here right here, where gold's been bouncing off of recently, 136.58-ish, is pretty decent. You can see a few reactions there, and a bigger level, much bigger level to me, is that 130-ish level. Let me move that line up. In the past I've harped on about 130, and why? Well, you can see here as I zoom out, you can see the years down here, so it gets you an idea. And if I don't make mention, guys, by the way, up on the top corner, upper left hand corner, will show you the time frame that I'm working off of, because I do like to toggle back between various time frames. I'll do that in this video. Usually, in the videos, usually 60-minute charts daily and weekly. We might look at a monthly here. But you can see in recent years, gold had a ceiling there, and then it finally had a breakaway gap right here. That's what you call breakaway gap, big gap up over that resistance level, and then had another leg up, which, as I talked about at the time, ended in what appeared to be at least a near-term buying climax, and that's marked by a pretty sharp move up on a surge of volume, and it's been drifting sideways since. So what do I see? Well, I could potentially, and I really don't have a strong opinion now, but I could easily see a continued move down, and that would most likely happen if the stock market rallies into year end and beyond. A move back to test that 130 level. If it got there, I can tell you that would be a very objective entry, especially if the charts are confirming at the time. First things first, we may, this thing could end here. This pullback could end tomorrow, or it could end at any other point in time. But that's just one potential scenario, and whether it gets there or not, I don't even want to put odds on it. I would just rather say let's watch that. And I'm going to add right here, right as I'm doing this video, I'm going to add a trend line which should come in right around there, and you can see I took that trend line off the mid 2018 lows here. come in, capture those reaction lows. And usually when I see things like that, again, if gold can get a little closer, it's almost like a magnet. I would think if gold got, let's say, even halfway there, it's probably going to go on and make a run at that level. It's such a well-watched support level. And then again, you'll have the 130, depending on if and when it gets there. It wouldn't be a straight down, probably zigzag down. And then you'd have not one significant support level, that 130 level being more important, but the uptrend line as well. So again, something we'll watch. We'll see what the indicators look like, what the price and volume action looks like, what the outlook for the risk on assets like stocks look like at the time, and then we'll go from there. Weekly chart. On the weekly chart, again, you can see the bigger picture here. This is a bull market in gold. You have a cyclical bull market right here, right there, that ended back in 2011 in gold, followed by a big multi-year correction / bear market, and then gold bottom in late 2015. And although the move up wasn't, at least for the first couple of years, wasn't very impulsive, it is when we finally took out, or when gold finally took out this large triangle pattern here. And again, that really confirmed that we were in a bull market. As I talked about before, that 130 level, it was a little too early to say that this was a bull market, because although we were making a series of higher lows, we were not making a series of higher highs. So at the time I said to really help firm up the case, or say that this is an uptrend, not just a consolidation period in a bear market, we need to take out 130, and we did. So now strip all that away and everything else, and again, that's what we're looking at here. You have since late 2015 a series of higher lows and a series of higher highs, and that's what an uptrend is. Just like a downtrend is a series of lower lows, or lower highs I should say, and lower lows. So there it is. That's your inflection point. So that's that, and that doesn't mean that it can't end and we can't go down there, but I don't see enough in the chart right now to say that the bull market is over. It doesn't appear that way, and highlighted this level recently, right about 137. That's where we pulled back to, and I highlighted a couple weeks ago. As an objective area if you want to look in, buy gold there if you're a long-term trader. The next good buy signal, that's just an objective level to enter gold, because you can have a stop below, because as I said, if it breaks out, we're probably going down. Chances are, I would think, if you get a solid weekly close below these recent lows, and again that line's about 137, it would increase the odds of a move down to 130. So what would that be? About a 6% or so drop. And that would again be a pretty objective level to buy, but it's not a buy signal. There's a difference between an objective buy point, because you buy at support and you have a stop somewhat below, so your downside's limited if it happens to catch that support and move up. But really what would be bullish for gold is to clear out this, break above this consolidation range that we've been in for the last few months, and that would be above that high there, about 147, and that could and should open the door to my next targets. You can see here on this weekly chart, 151-ish and about 174. All right, so again, I looking at everything else on the weekly chart, it's just not providing me a lot of clues. I don't try to force an opinion on a stock or security. We were extremely overbought, and again, that's in a bull market, it's common to be overbought, but when you hit those extreme readings, usually they're going to be followed by a correction, and that's what happened here in this last bull market. Sure, eventually one of those extreme overbought readings was the last one, but in this bull market there were several overbought readings. So back here, early on we just barely hit the overbought level. This is the first extreme overbought, and that's also typical of early stage bull market, when you start to get these move more well above that 70 level on the RSI. So that's it. We're kind of in no man's land right now. We're at the 50, the midpoint. The most objective time to go long gold, especially in a bull market, is on tags at that 30 level, the RSI 30 right there, when you're oversold. And so right now, like I said, we're in no man's land, and that's it. We'll move on. Last chart I'll show you here before we look at silver and the other precious metals is this monthly chart of gold. I like this 20-month EMA, particularly in the stock indexes, but it works well on a lot of securities. Again, I'm on a monthly time frame, so every candlestick is 1 month. So you put a 20 period exponential moving average, And as you can see, it does a pretty darn good job, and especially in the stock market. And that's, I still have those, all the major stock indexes remain above this on SPY, QQQ, everything else. But you can see bull markets, you're usually above it. There was a bear market and we crossed below those. Remember, monthly candles. You traded below a couple months, and it's not a timing indicator. It didn't get you out at the top or in at the bottom, but it kind of helps define the trend. And the thing is, usually during a bull market, you're above that 20-month. Right here, you broke it. And although technically the bear market started here, for a longer term trend indicator, maybe a long-term investor, you're not a very active trader, you want to know, you want to have gold in your account, your long-term portfolios. Well, at that point, you had a big red candle and a solid close below. Might not have got out of the top, and it might have said, hey, this isn't just a correction anymore, we're probably in a bear market. And you would have sidestepped this multi. That's about what, 1, 2, 3, 4 years, and in percentage terms, from where that month closed, about 30%. And then boom, we regained it right here. And this bull market so far has been a little bit different than most. It wasn't straight off to the races like the last one. It was kind of a very large sideways period. We were off the lows and it was moving higher, as I showed you earlier. So that's when these trend indicators don't work well. Any trend indicators, in my opinion, whether stock market, individual stock, whether you're using moving average pairs, when you get in a sideways trading range, you tend to move through those. So you want to use them in trending markets. So right now, with that breakout above 130, if gold is going where I think it will, any pullbacks now to the 20-month EMA should do a good job. But again, it's clearly above that level now after breaking out of this consolidation range. And again, that goes into play for my longer term analysis, as is the PPO, this signal line right here, the 9 EMA, the white line. When it crosses below the zero line is this dotted line right here, then your trend is bearish. And when it's trading above, like right here, your trend is bullish. So right here it crossed, even though it didn't get you in at the bottom, it told you right here at that point, where right about here it crossed over the zero line. Again, I'm looking at the white line, the 9 EMA, and it stayed above it and it successfully back tested it here. So it's that one indicator is saying gold's in a bullish trend, and it's still comfortably in a bullish trend according, again, to that one indicator. I don't use any one single indicator as standalone buy or sell signal. It just helps to confirm or refute my analysis with other indicators. ROC 12. Usually use this on the equity indexes, some stocks as well, but you can pretty much, when it's green, you're in a bullish trend, red, you're in a bearish trend. So you can see these healthy, well into the green, positive, meaning positive territory above the zero line there on the ROC 12. Okay, so I spent a lot of time on gold. I'm not going to spend as much on the rest, because I will say this, and I often do, birds of a feather flock together. So there are times where gold's outperforming silver or silver's outperforming gold. But again, just like the US dollar, lay a long-term chart with the gold and silver over each other, and you will see they're going to move in concert over the longer term. So I just spent quite some time making the case that it appears gold's still in a bull market. There's not really any evidence out there to the contrary at this point in time. And so let's just look at the nearer term outlook for silver. Let's just go here to a daily chart. Charts aren't clear, so I'm not even going to spend a lot of time on it. I can tell you right now I don't have a very strong read on that. I probably should look at silver futures for you real quick. I do have, near term, if you're an active trader, there's always, not always, but often opportunities to trade silver, especially off the 60-minute chart here. For example, we had this downtrend line recently, and I did point that out not too long ago on the site. I believe the positive divergence right there, and a divergent low. We broke out. And it's kind of like that initial move on the weekly chart on gold that happened off the lows of 2015, even though we're talking only a 60-minute chart here. This goes back to the early November. But it's been moving up in an uptrend, but not very explosively or impulsively, I should say. But the trend has been up. You can see these higher highs right here. So really a price channel, if you will. And it pulled back to this trend line today. This was one I had to, today my plan was to cover all commodities. I started with the broad market, and we had a nice lift from earlier anyway, so I just wanted to point that out. And wish I would have got this one out a little earlier. But I'll also say this: I'm not, I like to sit back this week. A lot of whipsaws. We got a big slew of economic reports coming out tomorrow. To me, it's just not worth being caught on the wrong side of a move, whether it's in precious metals or stocks. So I like to keep things light this week and a couple of days I'll be spending time with family, and then we'll pick it up next week when all the traders, come back in, or say all the dancers are on the dance floor. All right, so that's that. Levels to watch: 17,222 right there. Right there, that's your previous reaction high. A break above there would be bullish. And if you're, if you're bullish on silver, you can the best or most objective buys I see are pullbacks to this downtrend or uptrend line, I should say, as long as that continues with a stop somewhat below it. Again, not a lot of clues other than the recent divergent low that we've had here. There's just not a lot in this chart. Tell me where it's going to go. All right, gold. I didn't look at gold futures, but I'll do that now. Gold, pretty much. Remember a couple weeks back, I highlighted as being objective long entry, and I know quite a few took it. We had this divergent low right there, positive divergence right there at the lows, and we broke out then a downtrend line. So there was your buy signal, and we went up, and we've been like silver walking away up this trend line. Although on gold it broke, and then when it broke we went down. However, what we've done so far is we bounced off that previous reaction low, so you have support there around that 1449 level, which again, that's where if you're looking for an objective level to go long gold, I'd say it's pullbacks to that level with a stop somewhat below. Now let me add to this: if it happens to break below, I personally wouldn't care to short it, because what I see here is the potential for divergence, big positive divergence actually. And I would almost, I'm not going to put odds on it, but if I had to coin toss odds, that let's say the market pops tomorrow on those economic reports, or on Friday, the low volume day, or sometime next week, gold sells off a little bit more because stocks continue to rally. Well, that's going to look like this. Any new low, marginal new low soon. Marginal new low meaning, slightly, and then you reverse. Any marginal new low anytime soon will have put in pretty nice bullish divergence, and that's what I like to see, to position for a swing trade. So there's a potential setup. It may not happen, but if it does, we already have at least a double bottom there, and we could move up. Next targets, you can see I have some levels here, but I think this is a pretty big one here, about 1480 or so. Okay, I wanted to loop back to the dollar again, just trying to recall if I went over this chart. But the bigger picture, let me go to a weekly chart. And remember, gold again trades for the most part inversely to the US dollar. Here, I can show you real quick. This is a weekly chart. I just added chart properties, overlay gold. And again, inversely means one goes up, the other goes down. So don't look at the price differential, just look at the direction they're moving. You see, when wrong arrow tool, there we go. The dollar, which is, the white is gold, that's falling, and the dollar is going up at the same time. There are periods where they're going to track together once in a while, but here's your big move there, and the trend at that time in gold was down. Gold bottom right here, the dollar topped right there, dollar down, gold up. The inflection point right here, they both reversed, you got it. So you can see pretty simple stuff. Again, there are disconnects at times. And this, right here, what it is, this is more quantitative easing, more money printing by the Fed, easy money, and it's bid up a lot of asset prices. And it's also been, there's two camps, those that see, dark clouds on the horizon, buying gold. That's, again, the white line. And those that don't, that's not the stock market, but I just wanted to point out that inverse correlation there, as I mentioned it earlier. And let's turn that off and just show you, so if we can glean any clues as to where the dollar is going, then we can have at least help support, or again, maybe refute our, any bullish or bearish technicals that we see on gold. So the dollar, UUP, that's the US dollar index, this is a weekly chart, had put in a big divergent high. We'll start here. Put in a divergent low. This is how technical analysis, the same things I look for, whether I'm trading Apple or XLE, the energy stocks, or natural gas. It doesn't matter. These same technicals work, and this is positive divergence that led that big rally. Then we set up here with a divergent high, negative divergence that led to that big trend change there, which ended, you got it, in bullish divergence, etc., etc., etc. So again, this, just like the stock market, these divergences have been building, and we had a trend line break right there. And I'll roll in here tighter. There was an uptrend line in UUP. The dollar broke down, like the stock market, and it pushed back on the weekly chart. Stock market broke down, a while back, but has been pushing up and continued to make the divergent high in a lot of cases below some trend lines. And so this to me is a bearish chart. The dollar, has broken down. It broke down here, but again, it back tested for a while. But that had it burned through the divergences, that would be one thing, and I'd say, okay, well, there was your correction. The divergences played out, and that's all you got. But unfortunately, they haven't played out. Their divergences continue to build, and so the dollar broke down, and we're looking at a weekly chart here. That big red candle, we had a breakdown there, followed by another big red candle. It's had a little kickback here. The dollar tends to rally with, the U.S. stock market, or it has been for a while here. You can see, through 2018 and 2019, we had that correction. Remember when the stock market fell, that's that fourth quarter correction there. But all year, for the most part, both the dollar and the equity markets have been rising. And so there it is. So this, to me, it's kind of like the stock market on the 60-minute charts. It's certainly bearish technical. We just haven't played out. We need a little more evidence here, but it appears to me, again, based on these long-term technicals here, that the intermediate to longer term trend. Near term, it's hard to say whether we're going to drift up here a little longer, extend that divergent high, but I would say from the look of this chart, the dollar looks to be headed a lot lower, and for most, at least last couple months, I've been bullish on the euro, which is essentially a short bet or a bearish bet on the dollar, and we can get to that in a second. So there's your longer term outlook. Where it goes, I'm looking at a major trend reversal. Let's not even talk about price targets now. When you see big divergence like this and a big trend line break, you're talking the major trend reversal. So I'm not looking for a move down to this next target at 26.46. I'm looking for something along, these lines in the dollar. And we're also, when I roll back here, at least on UUP, you can see this is major, resistance on UUP right there. It's pretty much triple top highs. All right, let's look at the Euro or USD, because that is, if memory serves me correct, 57.6% of the US dollar index, which is by far the largest component. You have the yen at a distant second, and between the euro and the yen, that's most of the dollar index. The rest of the currencies hardly move the needle. So with the euro being over half the weighting of the dollar index, it's basically an inverse to the US dollar. And so I use this as a to try to gauge where gold and the dollar are going. And you can see, again, the technicals on this chart, they work well. They play out well. You had a divergent low back here, and there was your, divergent low, followed by a breakout right here, highlighted back at the time, set us up in an uptrend, and we set up on a divergent high at resistance and a breakdown, again highlighted at the time. We had negative divergence. These are your big trend changes. It's a weekly chart. This is not stuff I'm looking at position for a few days or a few weeks like the 60-minute charts or even daily. This is where you look for big trend changes, and clear as day, positive divergence, just like you had at this low. We broke out back here, and as I showed you with the dollar back testing the UUP a minute ago, same thing. The euro has been back testing that wedge from below, setting up in this price channel. Broke out recently. I highlighted the breakout. It seems like it just can't, like the stock market, it just can't get going, but yet the breakout is still intact right now. You can see we're still below the lows. I'd like to see a little more evidence, and what would that be? Keep it simple. A break above these recent highs right here. See these weekly candles? 1, 2, 3, 4. Let's put a line there. That should do the trick. That should be the catalyst for a move up to that next target there, about 113.658. Next stop about 114.939, and you can see a longer term downtrend line that may come into play here. So that's longer term. If we're trying to figure out what's going to happen today or tomorrow, this is a daily chart. There's your downtrend line there. Again, here's that breakout of that other downtrend line. We've been back testing in that channel right here. Remember, I pointed out that channel there, and there's your downtrend line. We broke out again, and it's what I just showed you on the weekly chart. So we really need to clear, like I said, those recent highs right there, about 119 or so. From the look of this chart, I can tell you, I think it'll happen. You have this, divergence has been building for a while. You have a, smaller divergent low from that point right there. Let me just show you what I'm seeing. Sometimes I talk this stuff through and I'm looking at it and I might not be clear. That's why I try to use these highlighting tools. So you had divergence there, but really it's part of a bigger divergence. And this really carries over on the weekly chart that I just showed you. On a daily chart, it looks really big, but that's what we've been doing, diverging. And so I have this alternative trend line right there as well. So that comes in. If we break that trend line and then take out that 119, I really think that will open the door for a move up here to at least that 114.4 level. Each of these are potential targets. And so yeah, I remain longer term, intermediate to longer term, bearish on the US dollar, bullish on the euro. How do you capitalize on that if you're not a Forex trader? Well, you can use ETFs or ETNs. Let's see, FXE is a euro ETN. Posted several setups on this recently. Here's what it looks like on the 60-minute chart. I'll get to futures in a second. Double bottomed here recently, or at least it's hit this 104.41 support level twice with divergence in place as well. So it is an objective long here. I'm going to say that right now. I can't make a screaming case to buy it, but I like it. We've had a few pops and runs lately. And the bigger picture is, you can see it's broke out. The charts are constructive. This euro's not flying. I've been highlighting it on the bullish side for last couple weeks to months. We had a bullish falling wedge here, and this is a 60-minute chart we're on now. Hourly is a 60-minute chart. Divergent low, breakout. We had that initial thrust up. We failed there twice at 106, came back down, but we put in a divergent low there. We started to move up, came to that same level, so we've simply extended that divergence. So even if we moved a little bit below it, the divergences would still be intact unless we went a lot lower. And so what does it need to happen? So if you buy here or somewhat below with a stop not too far below that, your next buy point or objective add-on would be, there is resistance right here about 105.21. That should trigger a move up here to 106 or so, and then a break above that should really open the door to a lot more. So FXC is one option. You can also, if you're bullish on the euro but you'd rather have a direct play on the dollar, UDN, that's the bearish or inverse dollar ETF. And you can see this chart looks just like the FXC, doesn't it? Same bullish falling wedge, positive divergence. Again, for the points that I mentioned before, with the euro basically being an inverse of the dollar. Or of course you could short UUP, which is the dollar ETF right there. There's the 60-minute chart, which is again an inverse to what we just looked at. I might have skipped E7, that's euro futures. That's one way to trade the euro as well, for those of you that are comfortable with futures. There's a positive or almost positive divergence. See, we hit that low. Remember, I just showed you an FXC, pretty much a double bottom. We hit the same support level and bounce. Euro futures came a hair above. That's about the 110-ish level. And so that's why if they jog down again, sometimes you have it close enough, you can call it divergence. Prices only need to make an equal or lower low, equal or lower low, versus indicators making higher lows, which you have here, and that's the case. So again, could run up from here or could jog down, as long as it doesn't go down too far, so the divergences will be burned through. Again, pretty decent support. I can't make a screaming buy, but I can say I like it here. I like it here with a stop somewhat below. There's enough reactions there. And again, everything I started out based on the longer term outlook. Otherwise, I would be maybe more interested in looking for short setups. So there's your next target, really about 111. And again, I would, at that point, we've already hit it a couple times. Maybe one more reaction if we get there, probably a breakout above that level, and that could open the door to move up to that 112-ish level. And again, guys, remember, you might not have any interest in trading currencies, but if this goes up, gold tends to go up, because if this goes up, meaning the euro's rising, the dollar's falling, and therefore that should be net bullish for gold. So that's again why I do this analysis, and keep this in mind, because maybe you go long gold and trade's starting to pan out, but you see the euro falling and the dollar's rallying. Sooner or later there's going to be a reversion to the mean there, and so you might want to, at that point, let's say, tighten your stops in gold or take profits. And Palladium, I've highlighted that one recently. Palladium has been trading, even though it's a precious metal, closer to the stock market recently. It's had a higher correlation than the other precious metals, and that's because it's more of an industrial play right now. There's a shortage of palladium out there. being used, for emissions controls on cars. Um, and so far, that what they're doing is, if the stock market's going up, then okay, the economy's okay, it's going to continue to grow. The day the market pulls back, everyone's saying, well, maybe there's something we don't know. So I've looked at this. You can do the same thing. Put a chart, and you'll see that it's traded lately closer, more correlated with than the S&P 500 than it has with gold. But as far as levels go, this is a daily chart. I started out on here, right there. You'll see on this chart, it'll say daily candles, 18 months. And that's a trend line that I'm watching there, and as well as this trend line, we might get some longer term sell signals if and when these levels break. And I think a pretty big level here, I have a resistance zone. Let me tighten that up a little for you. All right, let's come in here, grab this, and show you that's about 1563, and then about 1602 to 1614. There's support there. We recently put in a divergent low, and that's why I think there may be more. You can see back here, go back a couple years, negative divergence, negative divergence, negative divergence, and you can see what happened after each of those divergent highs. You had breakdowns and corrections, and they ended in positive divergence. So far, we had a breakdown of this trend line right here, as well as this one. I highlighted those a few weeks ago. In fact, let's take it down to the 60-minute chart. Okay, 60-minute chart. There's that longer term trend line, goes to the left of the chart. We're close to back testing it now. So we had some minor trend lines that give some early sell signals back here. Breakdown, another breakdown. Pretty impulsive action, and we've set up recently, I believe I highlighted last week, was it, this price channel. And I like to put a midpoint. You can also, if you have an Andrews pitchfork drawing tool, TC2000 has it. I don't think it's on these charts here. It'll do the same thing. You get a price channel, and it's going to give you a midpoint. And so securities, I note often within a price channel, they have a midpoint line that they tend to trade off of. It acts as support when above it, and then when you break that level, it acts as resistance. So you tend to trade in these clusters. Right now, we're trading in the upper hemisphere of that price channel right now, and we're close to back testing. We're also close to taking out the new highs. I don't believe this correction is over. Here, let me show you PALL. For those of you that prefer to use ETFs, PALL is the ETF for Palladium. This is a weekly chart. This paints a bigger picture. This, to me, says Palladium has a big down coming, a big down move, big downtrend. But there's work to be done. We had a minor trend line up here. It broke, and there was a pretty impulsive correction, a little bear flag there, another move down. But then you have this trend line right here, longer term, more significant trend line. When I'm looking at a chart, the longer the trend line and the more reactions it has, the more valid it is. So this is a pretty important one. We broke it back here, but we continued up, had a brief shoot above it, and the thing is, prices continue to react or respect this level. They're reacting from below, and so we've set up back testing that trend line, and we have this uptrend line here. So what you need to see is a breakdown of that trend line and some impulsive selling. But these divergences are pretty powerful divergences, and I think when they finally do play out, they're going to play out for a correction all the way back here to about 85.25 at least. And that would be a drop of about 50%. So keep an eye on this one. I've posted quite a few updates recently. Not an official trade, unofficial trade right now, but you can see there's a breakdown on the daily chart here. And to me, you can see a nice clean uptrend. Usually, you can see a few uptrend lines on this chart. In fact, here, let's just go back, and I'll show you why I think there's probably more downside to come. You have an uptrend line here. Let me scroll even further. There's your uptrend line, right? We broke down right here. We back tested, and we walked down. Usually you don't get, let me come, a one and done kind of correction mode. Especially, you can get a pullback along the way that's one and done. But when you break a trend line, especially with negative divergences, divergent highs, you get an initial sell-off. After the breakdown, you may consolidate for a while, kick back a little, and then another leg down. So that's an ABC. That's usually a minimum of a ABC ABC corrective wave pattern where you have a leg down, a little kick back, and then one more down. And right here, so far, we had an impulsive breakdown, and we had a pretty well-defined uptrend line, price channel there. We had negative divergence, impulsive breakdown. But that's it so far, and we've drifted higher. So yeah, we're close to where we broke down. Last time we didn't come that close, but I'm still favoring something along these lines. I just can't say it with the highest conviction. I don't see a lot of sell signals in place right now. We had them back here. We've been drifting back. And so, like I said, unofficial trade for now. But because I think the longer term charts have the potential for a lot more downside, if and when I see that evidence, I'll most likely add this as an official trade. What bullish case? Well, you have the PPO turning back up above the 0 line. That's usually bullish. It'd be nice to see it turn down soon and go back below that. That would give me a little more confidence that maybe it'll break this trend line and continue lower. Let's see if there's anything else I wanted to cover here. Platinum, closely related to palladium. Palladium's even in the platinum group of metals. But just near-term direction, I'm not so sure. I just want to zoom out here. This is a daily chart. You can see all the things. Trades pretty well to technicals. You can see a downtrend line there, breakout, little bearish rising wedge pattern. You can stop, freeze this, see all the things. Then you get sometimes in a trading range, and that's where it's just really, I don't see a whole lot on the charts. But most recently, you set up in this triangle pattern here. We broke out, impulsive breakout, and we're still above that, drifting lower, but this chart really doesn't give me a lot of clues as to where the near-term direction is. In the weekly chart, I have to say, where palladium, remember P-A-L-L, I just showed you, has been in a strong, actually one of its strongest bull markets ever, with big negative divergence after a huge rally. From early 2016, this thing has rallied 281% or so, whereas PPLT, a very similar metal, also used for emissions controls, this is a bullish chart, and I mentioned this a few weeks back. You could do a Paris trade, go long platinum and short palladium. If you had enough time frame, enough capital to do that trade, I think it would work out well. Do a Paris trade there. But there's it. There it is, a breakout. There's your divergent low right there. And here, let me just highlight this. You've got the downtrend line, positive divergence. This is a weekly chart right here. Your positive divergence. And breakout back test so far. We've got support here around 81.80. It's kind of flirting through that level, so we'll see. We'll have to keep an eye on that one. But again, to me, I think this one has much more attractive risk-reward profile, much more upside potential. But the thing is, palladium is in a resilient uptrend, so you got to be careful with that one right now. And palladium, like I said, not any strong buy signals. All right, let's wrap it up here. I hit them all: silver, gold, platinum, palladium. Those are the big ones I like to cover. Of course, I spent a lot of time on the currencies. And look, none of these are screaming, buy now, standout trading ops. I will follow up with the other commodities in another video: natural gas, oil, and if I can wrap it all into one video, I'll also hit the agricultural commodities. Not all of them, but soybeans, coffee, wheat, maybe any others that stand out. And maybe another update on Bitcoin. It hasn't done what I wanted to see yet, and as I said, my preference kind of hold off. Let's see what happens next week before really, taking a lot of new positions, because you may get whipped to pieces, tomorrow and or Friday. So we'll see. All right, let's wrap it up here, and like I said, next video we'll cover commodities and those other things.